Should you be selling at $10 million or wait for that $30 million exit? This question appears simple on the surface, but it's not. In fact, I've seen many financial advisors give horrible advice, disaster after disaster, not for them, but for you, the business owner who spent the last 2 decades building a successful business, and they have one chance to exit it successfully. And today, I'm going to show you exactly how to think through selling from a business lens so you get the max amount of value from selling your business. And I know this approach works because I've walked dozens of business owners through this exact situation from all levels, $10 million north of $100 million. And these are the 2 questions we're going to focus on in today's conversation. Question number 1, how much risk do I have in my business? And not the risk that you're thinking about. I'm going to reveal the blind spots that you have when you go through the process of selling your business. Because chances are, if you're an entrepreneur watching this, you haven't sold a business for tens of millions of dollars. And those are blind spots that you have to know to make sure you avoid the disaster when you take your business to market. And question number 2, what is your number? Not a number, but a number that is hyper specific to you to make sure that you don't end up like the guy who sold too early and had to dramatically change his lifestyle after he sold this company. If those are dream outcomes that you want for selling your business, let's dive in. How much risk am I really taking on? When I think about risk, specifically from a business lens, we need to be thinking about 2 primary factors when we're going through the process of selling our business. Number 1 is, what are the multiples that are specific to our industry? Not multiples across the board. They need to be very specific to the company that you own. And then number 2 is, how much cash are we actually going to need to be redeploying back into the business to make sure we're in a spot that we can grow that business from $10 million all the way up to $30 million. When you think about those 2 factors, you need to be thinking about the risks that are involved with each one of those individually. So let's look at both the multiples by industry as well as the Capex, or the cash needed for the growth that we're talking about from $10 million to $30 million. First, let's check out the multiples. So if you're new to this channel, when we say multiple, this is how you actually calculate the value of your business. You take your EBITDA, think about that as the amount of money you have left over after all of your expenses, and you multiply it by the multiple in your industry. So for this conversation, let's look at the top left of our chart. Looking at software and technology, and if we're between $1 to $2 million of EBITDA, we're going to trade somewhere between 6 to 8 times. Now, if you're at $2 million of EBITDA, you're going to trade between 6 and 8 times. So at $2 million of EBITDA times our 8 multiple, that's going to give us a $16 million valuation. If we go all the way down to the bottom here, we look at the most capital intensive types of businesses, they're going to trade at lower multiples. So in transportation, on a $2 million EBITDA business, we're only going to be trading at roughly a 4 times multiple. So that same amount of cash flow to ourselves is only going to give us an $8 million valuation. So half the enterprise value of a software business. Now, as we think about risk from a multiple perspective, we need to make sure we understand what are the multiples in our industry. So if you're looking at this page and you're thinking, I would really love to take a deeper dive into this, in the comments below, I'm going to have a link specifically to this PDF where you can look at your industry, you can look at the EBITDA in your business, and you can determine what multiple range you're at today. Outside of the multiples, we need to be thinking about the amount of cash that we're going to need in the business. Because when we think about risk in the business, not only is it understanding what our valuation is going to be, but it's also understanding how much money we're going to have to put back into the business in order to get that multiple that we just talked through. So if we look at those same industries on the left-hand side, we have software up at the top, all the way down to transportation at the bottom, we have widely varying amounts of capital expenditures. So in this same situation, let's say that we have a $2 million EBITDA business. We only need roughly $100,000 of Capex per year. When we think about software, it's one of the lowest Capex businesses that are out there. But if we go all the way to the bottom and we look at transportation, we are talking about one of the largest Capex businesses. You got to buy trucks, you got to hire people, you got to have warehouses. So in that same $2 million EBITDA business, we have to reinvest roughly $700,000 in capital expenditures. A huge amount of cash that's going back into the business. And when you think about the difference between that $10 million business and that $30 million business, this one area is a huge blind spot for most business owners, because going from 10 million to 30 million, it is going to take significantly more money. And if you are in a high Capex business like transportation versus if you're in software. To put a bow on this, in the lower Capex types of businesses, I would tell you that you are much more likely to be able to grow your business from 10 million to 30 million easier with less risk. Whereas when we think about transportation or logistics, there's going to be significantly more risk. So depending on the type of industry you're in, it's going to determine how much risk you're actually taking on. And just like those multiples, in the comments below, I'm going to have this document there for you to download for you to take a deeper dive into the industry you're in and the Capex that's required. To wrap up the risk conversation, what I would encourage you to do is look at the industry you're in, understand the multiples, and then understand how much money you're going to have to put back into your business in order to get to that enterprise level range that you're looking for. In this situation, from 10 million to 30 million. If you're comfortable with reinvesting that amount of money into the business and you feel like you have a high probability of executing that next EBITDA range or multiple range, I'd say go for it. And if you're not confident or there's a lot of uncertainty, specifically in your industry, that's a huge blind spot. Make sure you're taking that into account. And maybe it's time for you to pull the trigger at 10 million and not try to reinvest and get to 30 million. But in order for you to actually understand whether you should sell at 10 or you should sell at 30, you need to understand that second question. What is my number? And again, this number needs to be hyper specific to you. The number is going to be different for everybody. One of the biggest blind spots I see for business owners, and I saw this just last year, was a business owner who came to me. He was selling a logistics business. He was going to sell it for $20 million. And he said, Luke, I'm putting my business up for sale. A broker told me that I was going to get $20 million for it. I'm going to be able to live off of that for the rest of my life. I said, wow, that's really exciting. $20 million is a lot of money, something you should be really proud of. But my next question to him was, how much does it cost to be you? He says, well, right now I'm making about $3 million. So I'm making about $1.5 million after taxes. I said, oh, that's wonderful. How much money are you spending? He said, well, I'm spending all of it. And he said, the great thing is, if I get $20 million, I'm going to continue to be able to spend $1.5 million. Unfortunately, I had to give him the bad news that his lifestyle was going to have to dramatically change. His exit would have been a complete disaster if he would not have talked to me, because that same cash flow is not going to be able to be consistently generated from a portfolio. Let's look at a document that's going to show you exactly how to determine your number based on the enterprise value of your company. To keep this matrix simple, on the left-hand side, we have the sale price. So think about this as the headline number of your business. And then as we move across the matrix, what you can see is we have our lowest income tax states all the way up to our top income tax states. If we think about our lowest income tax states, these are going to be states like Tennessee or Texas, where we have 0% state income tax, all the way up to our highest income tax states like California, we're going to have to pay 13.3%. Now, if you're not sure what the state tax is in your state, I would encourage you use the base case, the case that's highlighted in blue, where it's very easy for you to determine how much enterprise value I need to sell my business for in order to be able to spend a certain amount of money on an annual basis. So if we look at this on the $10 million range, roughly we could spend $350,000 a year for the rest of my life. So as you think about your lifestyle today, are you able to live off $30,000 a month? If the answer is yes, $10 million exit might make sense. But if you hear that and you think, well, Luke, does that include my lake house that I'm going to buy? Does that include the college that I'm going to fund for my kids and my great grandkids? If it doesn't include those things, we need to make sure that we hang on to the business. And that goes back to making sure we understand our risk. So as we think about the number that applies to you, we need to make sure we're looking at a sale price that aligns with the lifestyle that you want to live. And what I would encourage you to think about as you're looking at this page is that the distribution rates, meaning the amount of money you can spend off of your portfolio, is actually going to be significantly higher than what most financial advisors are going to tell you on this chart. Now, why is that? Well, because we specifically build portfolios for entrepreneurs that have gone through an exit so they can spend the most amount of money off them. So if you've exited and you're thinking, man, I really wish I knew how to construct the portfolio, check out the video here where I break down the exact details on how I would construct a $10 million portfolio post-exit. Now, chances are you're watching this video and you're not in the process of selling your business, but you're going to be selling your business at some point in time in the future, or you're growing your business with the intent to sell it in the future. What I would encourage you to do is download this document. It's in the comments below. It's a PDF. You can store it away and put yourself in a position that no matter what happens along the way, you can always pull this up and know, where am I at in the process of being able to get to my number? So that way I can live the same lifestyle that I am living today. As we wrap this up, my one encouragement to you is, if you are going through the process of exiting, or you want to go through the process of exiting in the future, you need to be thinking about your time. How am I going to be spending my time post-exit? It is one of the biggest mistakes that I see entrepreneurs make. They look at the headline number, they verify that they can live their lifestyle off of it, they're fine paying a little bit in taxes, and they pulled the trigger, only to realize that the money in their bank account doesn't fulfill them. What is going to fulfill you is making sure you understand how you're going to be spending your time post-exit. Maybe it's still working in the business, maybe it's working on something outside of the business, but make sure you know that before you pull the trigger. If you haven't already, please subscribe to the channel. We're going to be putting out more and more content just like this for business owners just like you.